Nairobi, Kenya's capital city and East Africa's most vibrant economic hub. This is home to a thriving tech scene and some of the most cutting-edge startups on the African continent. Africa's general lack of proper infrastructure has served as a catalyst for Kenya's technological explosion. The country boasts one of the fastest mobile internet speeds in the world thanks to its undersea fiber optic cable. Just like Nairobi, a huge number of cities and towns in other African countries are counting on the uptake of the digital economy to ensure sustained growth over the coming years. Indeed, 19 of the top 20 fastest growing countries in the world are in Africa, fueled by rapid urbanization and an increasingly young and educated population that is driving consumption of online services. Despite a negative economic outlook as a result of COVID-19, the African internet economy is expected to be resilient. Analysts predict that by 2025, the internet economy has a potential to contribute almost $180 billion to Africa's total gross domestic product. The sectors expected to drive this growth include financial technologies, healthcare, online marketplaces, education, governance, and agribusiness. The financial technologies sector, or fintech, is growing in Africa in part to serve the population that is currently unbanked and financially excluded. The rise of these solutions and access to mobile technology are driving demand and growth in this sector. M-Pesa, for example, has encouraged movement to cashless transactions, even for banks. Opportunities arising from the need to expand beyond traditional banking services are also contributing factors. These fintech startups address different categories of the banking and finance sector, such as lending, payment processing, personal finance, money management and transfers, and consumer banking. Fintech is enabling African countries to leapfrog from physical retail banking to online payments, remittances, microloans, and insurance. Paired with rising mobile connectivity, individuals living in rural areas with poor physical banking infrastructure and limited access to fixed-line internet access are increasingly able to use mobile devices for financial transactions. In healthcare, a number of innovators have developed internet-based tools to help navigate the new way of life occasioned by the COVID pandemic. While people need information on the virus, prevention and treatment, governments, on the other hand, are keen to contain the spread by curtailing movement while trailing and tracking down suspected carriers of the virus. A host of healthcare-focused startups across the continent have reformatted existing services or launched new ones to enable telemedicine or healing from a distance. Such include Kenya's Ilara Health, Cameroon's WeCare, and Ghana's Redbird. Others are Maidawa, Healthlane, Mtiba, Medicare, to mention a few. In Morocco, a COVID-19 tracking application called Wihaitna was launched in June of 2020 to track new COVID cases using GPS technology. Similar innovations include Kenya's Msafari, which tracks people on public transport. The pandemic further contributed to the growth of existing local online marketplaces. Analysts agree that the curtailed human-to-human interaction occasioned by the COVID pandemic boosted the uptake of e-commerce. The use of platforms like Jumia and Just Fresh Foods in Zambia has allowed purchase of goods online where the merchandise is delivered straight to a customer's doorstep. Similar e-commerce tools have been employed to varying degrees in other countries, for example, Masoko, an online marketplace in Kenya, South Africa's Take-A-Lot, and Nigeria's Konga.
People are worried about the economy, or people are losing jobs. People switch their spending patterns online as well. So they stop spending so much on the bigger ticket items, so like phones, TVs, etc. And they start to buy much more food products, but also some interesting trends that we haven't seen so much before.
Innovations in agribusiness have eased the way of doing business for farmers and their clients by providing an alternative to crowded open-air markets that are likely viewed as high risk for COVID-19 infections. Here, online marketplaces for farm produce like Nigeria's Farm Crowdy and Kenya's Mkulima Young have reported tremendous growth during the pandemic. Other agrotech solutions offer information and support to farmers, including iCow, Modisa, CocoLink, and AgroHub, to mention a few. Increased connectivity has presented an opportunity for businesses and communities to leapfrog with new technologies, paving the way for economic development. The digital economy refers to economic activity that uses electronic communication and digital technologies to provide goods and services. Digital technologies and innovation have rapidly transformed our world over the last 3 decades. If the Industrial Revolution was built by the factory system, the changes we see today are organized around digital platforms. The digital economy has indeed proven to be the best solution for businesses going forward, and especially within the African continent. The main building blocks of the digital economy include 1. The Internet, which enables firms to offer goods and services online and enables consumers to seek the goods and services that they need. 2. Electronic communication, including email, that enables affordable, instantaneous communication across the world. 3. Digital automation, where companies use the processing power of computers to make decisions on output, prices, and how to reach consumers. 4. Digital payments, using tools such as M-Pesa, Momo, Tigo, and Pesalink, providing a cashless payment system. And 5. Social media, which is an aspect of the digital economy, with individuals using it to share recommendations about business. Since the year 2000, the number of people with internet access in Africa has grown to over 520 million, or 40% of the population, and 60% of the population accesses the internet via mobile. A variety of sectors including fintech, e-commerce, health tech, media and entertainment, local transportation, food delivery, and business-to-business e-logistics are leading the way in Africa's digital transformation. Although formal sector businesses have historically shaped the economy, the internet economy offers leapfrog opportunities to address challenges faced by Africa's fast-growing number of informal businesses and workers. Just as these platforms have grown in size and scale, the opportunity for abusing their power has also become very real. Despite the challenges, majority of analysts agree that the positive impact of tools used in the digital economy far outweigh the negatives. Some of the advantages of the digital economy include better access to information for consumers to enable them make a choice while comparing goods and services offered by different firms. Saving on time by eliminating the need to travel long distances to make purchases. You can now make orders for office supplies over the internet and have the merchandise delivered the next day. Reduced costs for businesses, which previously had to pay exorbitant office rental fees. Most businesses can now be run over the internet, with retail chains able to send personalized goods direct from factory or warehouse to people's homes rather than through shops. A digital economy allows greater personalization that would be impossible under a traditional economy. For example, while a traditional shop would only have room to stock a certain number of colors and sizes, a consumer can now choose their preference for a custom-built product. In some markets, aspects of the digital economy have made it easier for new firms to enter, challenging the monopoly of traditional firms. The digital economy has brought many new services which were previously inconceivable, such as online home deliveries for groceries as well as dating apps. The mass production of online data can help inform governments and charities about what is happening in the economy. For example, in tracking the spread of COVID-19, the use of a mobile phone app may indicate where local hotspots emerge. The digital economy is opening up opportunities for the developing world. For example, computer programmers in Nigeria can easily underbid their Western counterparts, leading to new job opportunities and higher incomes in Nigeria. Lockdowns brought about by the COVID-19 pandemic had initially caused a sharp decline in economic activity. However, the digital economy has provided more flexibility in working remotely. Working from home has helped reduce contact between persons and consequently slowed down the spread of the virus. Yet, challenges too abound in the conduct of the digital economy. Despite the potential for new startups, many aspects of the digital economy have been abused due to lack of proper regulations by governments. For example, a number of digital money lenders have been accused of fueling the rise in bad debts by offering loans at exorbitant interest rates, resulting in higher rates of default. Digital technology has also been accused of causing addiction to vices, including the negative effects of excessive and uncontrolled sports betting among the youth. Also, the sheer volume of information can cause us to drown in information and lose sight of what we actually need. More choices do not necessarily lead to better outcomes. When faced with a bewildering range of outcomes, we can take time to decide, and it becomes easier to procrastinate. Digital technology has further led to a general lack of privacy, with some of these tech solutions solely being used for data mining. The personal information obtained by some of the mobile apps could end up in the wrong hands to the detriment of innocent users of such technology. Other areas of concern include the fact that self-employed freelancers who rely on internet technology for their employment do not get to benefit from the protection provided by labor laws. As such, some workers, including taxi drivers who use mobile applications, often go without sick leave or other employment protections. The use of social media has further led to the creation and sharing of more graphic content. The anonymous and distant nature of social media has worsened trends towards personal attacks and the posting of violent or sexual images. The digital economy has enabled the proliferation of content that is damaging to human well-being. As far as the environment is concerned, the biggest headache for the African continent is the disposal and management of electronic waste. With constant improvement in technology, many gadgets are soon rendered obsolete and discarded in total disregard to the impact on the environment. Despite all these challenges, now more than ever before, the African continent is banking on the digital economy to help actualize its dream of a continental free trade area. The African Continental Free Trade Area (AfCFTA) agreement is projected to connect 1.3 billion people across 55 countries, making it the largest free trade area in the world by membership. The pact has the ability to lift 30 million people out of extreme poverty, increase workers' wages, and generate gains for women. The AfCFTA is a major opportunity for African countries to diversify their exports and accelerate growth. This is especially important in the context of the COVID-19 pandemic, which has disrupted trade and triggered up to $79 billion in output losses for 2020 in Africa alone. Achieving this will depend on putting in place significant policy reforms and trade facilitation measures. The AfCFTA emphasizes the following between the member states that have ratified the agreement. 1. Reduction of tariffs and non-tariff barriers. 2. Facilitation of free movement of people and labor. 3. Right of residence. 4. Right of establishment. And 5. Investment.
The promise of free trade and free movement is prosperity for all Africans.
1st of January 2021. That is the official kickoff date for AfCFTA operations. The date, which had initially been set for July 1st, 2020, was put off due to the coronavirus pandemic. Negotiations later resumed between countries to deal with final sticking points around rules of origin and market access.
While the operationalization of the Secretariat was postponed due to the COVID-19 pandemic, The same pandemic has also magnified the urgent need for speed to accelerate economic integration on the continent. This crisis, with its negative impact on trade and the multilateral system, is also an opportunity to rethink our value chains and reduce our reliance on traditional supply routes.
Through the pact, 30 million Africans will be lifted out of extreme poverty. Incomes of nearly 68 million Africans who live on less than $5 a day will be boosted. Africa's income will be boosted by $450 billion by 2035. Africa's exports will be increased by $560 billion, mostly in manufacturing. Larger wage gains will be spurred for women. Wages for both skilled and unskilled workers will be boosted.
We in Ghana believe that an increase in trade is the surest way to deepen regional integration in Africa. It will mean a rapid increase in the exchange of agricultural, industrial, financial, scientific, and technological products.
West Africa will see the biggest decline in the number of people living in extreme poverty, a decline of 12 million. Central Africa will see a decline of 9.3 million. Eastern Africa will see a decline of 4.8 million, and Southern Africa 3.9 million. Countries with the highest initial poverty rates will see the biggest declines in poverty. In Guinea-Bissau, for example, the poverty rate will decline from 37.9% to 27.7%. In Mali, the rate will decline from 14.4% to 6.8%. And in Togo, the poverty rate will decline from 24.1% to 16.9%. For the AFCFTA deal to work, Africa's digital economy has to be reset to align with the new reality of a continental free trade area. Some of the reset points could include addressing information and data deficit, boosting e-commerce through better connectivity, realigning existing regional economic communities, aligning other trade agreements to AFCFTA, governments cushioning firms through the transition, providing support for workers who will lose their jobs, and designing policies to boost readiness. In many African countries, adequate and affordable information and communications technology and connectivity to enable digitalization to take place is still an issue. Africa does not yet have the legal framework and conducive environment for digital activities and trade. Other concerns need to be dealt with, such as the fight against digital trust and competition policies in the digital sector, data privacy, protection, and cybersecurity. The existence of conflicting regional economic communities is yet another thorny issue. Most African countries already belong to more than one economic community, and so convergence among these communities to make them compatible with the AFCFTA is key. Moreover, World Trade Organization commitments and treaties with external regions such as the EU, US, China, and Canada could impede the AFCFTA. Member states are going to face a transition period in which they may undergo adjustment costs. Less diversified and less flexible countries will suffer more from these adjustment costs than bigger and more diversified economies. At the same time, the adjustment costs may be higher for MSMEs than for large companies. This may create social tensions unless compensatory measures are set in place by the governments. In a few sectors facing job losses, governments will need to be ready to support workers with adequate safety nets and policies to retain workers. In an interview with Africa Renewal, a magazine published by the United Nations, Wamkele Mene, Secretary General of the African Continental Free Trade Area Secretariat, noted the dependence of the AFCFTA on mobile connectivity. He said, quote, "Digital trade is possible through mobile phones. We know that you can access distant markets using your mobile phone. We also know that Africa has one of the fastest growing penetrations of mobile subscribers. It is a question of leveraging all those technological innovations and advantages." End of quote.
The economic integration of Africa will lay a strong foundation for an Africa beyond aid. An effective implementation of the AFCFTA will dispel the notion that the AU is not capable of executing its own decisions.
A new era is at hand for the great continent of Africa, meaning a new way of doing things is a must.